Well, good afternoon and welcome to the second OnCore Live webisode. I'm your host, Robin Bell, and I'm really looking forward to our interviews here today. Now, for those of you just joining us for the first time, you might be wondering, what is OnCore Live all about? Well, OnCore Live brings industry leaders and Avery Dennison experts together in an engaging live format to help you serve your customers with insights and services that will help you grow your business. We've been having many conversations with converters and OEMs regarding the state of the marketplace. We're talking about what's going on with raw materials, the supply and demand balance, and of course, staffing. Now, to get those insights, we brought back Steve Flannery, Avery Dennison Performance Tapes and VP General Manager. Steve's able to give us a unique perspective based on Avery Dennison's vertically integrated adhesives and film setup. Steve, welcome back. Really glad that you're here with us today.
Thank you. It's always good to be with you, Rob. And I just want to thank everyone on the line listening in too. I know everyone's busy. So I appreciate everyone taking the time to listen in to Susan, Isabel, and myself talk. So
I do too. So let's get to it. This is exciting. So big question on everybody's mind, according to our salespeople: when will things get better? Can you shed some light on this for us?
Sure, I'll try here. So my crystal ball is not much better than most others, I'm sure, on the line. But Avery Dennison, as I'm sure most people on the line know, we buy about almost $4 billion worth of materials and related supplies for our company. So we've got a lot of insight. We're also backward integrated in adhesives. So we actually polymerize our own adhesives as well as buy adhesive from suppliers like BASF, Ashland, Henkel. So we've had a fairly close relationship both downstream in some of those feedstocks that Susan talked about, as well as through our close relationship with some of our partner suppliers. I would say, as Susan said, there's some good and some bad. The good is the disruption here that from Storm Uri is past us. All suppliers essentially are up and running, and they're continuing to increase their capacity literally week over week, month over month here. The problem that we've got is just a little bit of imbalance. So obviously inventories were already low, and essentially got basically completely depleted. So they're really working to catch up on their inventories and get us all back to a steady state position. That's going to take a little bit of time here.
Yeah.
Again, I would say June is going to continue to be pretty bumpy, just like May was fairly bumpy in terms of supply through some of the finished goods adhesives. So folks like Ashland and Henkel and BASF, they have most of their customers on sales allocations today, whether it's 100% or 110% or 90%. They are managing the supply demand until they get caught up here. But again, we're starting to see some relief. I expect July to get a little bit better, and September yet again a little bit better. So again, we're seeing the light at the end of the tunnel, but I would say the light at the end of that tunnel is still a bit unknown, but I think we are past the worst of it here, and things should continue to get better.
That certainly makes you feel a little better. So how has Avery Dennison been able to handle this?
Sure. I mean, it's been difficult for everyone. It doesn't matter where you sit in the supply chain. A couple of things. Again, I mentioned we're backward integrated. So those of you who don't know the technical sort of details of making an adhesive, there's really, at least for most of Avery Dennison's adhesives, are acrylic based. So whether it's solvent or water or UV. So acrylic is a big component, of which there's two main components or two main monomers that we buy, BHA and 2HA. Those, we actually buy the raw materials and convert it on our side or polymerize it on our side to make the adhesive. So that flexibility has really allowed us to serve our customers better than I think we would if we didn't have that capabilities. We're able to pull both raw materials from whether it be the spot market in Asia or some of our tried and true suppliers, as Susan talked about. We were able to pull levers on our plan C's and plan D's, along with, again, the close working relationship we have with some of our partner adhesive manufacturers. Has really helped us to minimize the impact to our customers. Having said that, demand, on top of this supply constraint, demand, I would say, has really been through the roof. We're seeing demand above not just last year's levels, which is easy to do, but really well above 2019 levels as demand continues to increase for just about all the areas that we talked about. Even some of the areas that Susan laid out as losers, we're actually seeing some fairly strong demand in some of those areas, and I'm sure some of the folks on the line are also seeing that as well.
Yeah, that's good news. So because supply and demand has imbalance, and it's going to be with us for a little while longer, as you were saying, what are the implications for this moving forward?
Yeah, I mean, again, you don't need to be a rocket scientist to realize that this is sort of economics 101, supply demand. Again, Susan mentioned it. When supply is constrained and demand is high, prices adjust accordingly until that comes in balance. So we're dealing with that now. I mean, literally a week does not go by where we are not getting an increased letter from one of our suppliers, both in terms of just the cost of the materials and the supply imbalance. And many suppliers up and down the supply chain are making just economic choices as to at what price they want to sell their products at, based on the value that they see in the marketplace for their products. So it's one that we're continuing to manage through over time here. And again, it's hard to say when this is going to end, but I think we're going to see this for at least the next 6 to 12 months. And in fact, just to quote ISM, the Institute for Supply Chain Management, looks at an index that in particular looks at delivery length. So a lot of us are experiencing delayed deliveries as a result of the supply chain imbalance. I mean, we're seeing supply deliveries in terms of the time of deliveries on par with what it was in the mid 70s. So we're seeing extreme delays in deliveries, which again is all part of this, these suppliers up and down the value chain of making decisions as to who's the first priority versus second priority and at what price they charge for them. So again, it's going to be a bumpy, I would say, next 6 to 12 months.
Yeah.
Even though I just said I think it's going to get better.
Yeah, and hopefully we'll see a little bit better movement towards reduced pricing in the weeks and months ahead. I'm not so sure this is sounding reassuring to our listeners, but what is Avery Dennison doing about all of these issues?
Sure. I mean, like most of us, and again, this shouldn't be much new news to folks on the line, but we are working wherever we can to ensure, again, where we've got leverage in terms of being able to self-supply materials or go right to the source and get costing pricing, we're doing that. And candidly, I think this creates opportunities up and down the value chain, as many of the folks on the line are probably making decisions, do I buy from a 3M or Performance Tapes or a Berry Plastics? It creates an opportunity because some of our suppliers are being less flexible, and we're making choices with respect to who are we able to partner with and not. And then obviously, again, we're working closely with our customers with respect to where we've got opportunities to substitute raw materials, in particular, on the foam side, even in in case of some of the liners, we literally at any price can't get that component, any particular component. So we're working hard to find alternatives that we can substitute in that are as close as possible with respect to performance, look, and feel, to both maintain prices and maintain supply, which maintaining supply is really our number one priority for us and for our customers.
Of course. Can you touch briefly on staffing?
Sure. And I know this one's on my mind because I've talked to a number of our customers, and this is an issue across the board. And I actually would argue this is, I think, something we're going to continue to experience with respect to the inflation conversation. We are no different than many of the folks on the line. We're finding good employees is not easy. And we're seeing both wage inflation as well as is just difficulty finding folks. So, I would say it's something that we all should be sharing about different tactics that we're doing, broadening, widening the net for folks. I think we're digging deeper in terms of building stronger pipelines of employees. So working more closely in some of the communities in which we operate at the high school level, to pull folks that we think and to advertise our company to them so that they want to work for us, because this is, I think, something both on the tape manufacturing as well as downstream and upstream. Staffing is going to be a big issue, and something, if you're not thinking about it today, not just for yourself, but how it might impact the industries you serve and how your products can help with that problem, is something you should be thinking about.
Yeah. Well, overall, it sounds like you're doing everything that certainly that you can, and I applaud you for that. Steve, thanks for your time. Thanks for addressing some of these issues on the minds of our audiences. I'm glad you touched on raw material supply and demand and staffing, three of our big issues. Thank you, Steve.
Cool. Thanks, Robin. And feel free, those of you, if you have any questions on anything we're doing or anything on the industry or suppliers, please put your questions in.
Yeah, and again, post those questions in the Q&A tab on your meeting toolbar. You can do that now.